In crypto trading, there's this uncomfortable choice we all have to face, a fundamental trade-off that pits incredible performance against the core principles of crypto itself. Today, we're diving into a project called Lighter that claims it can finally solve this puzzle. So let's see if it really has what it takes to go up against the giants.
So here's how we're going to break it all down. We'll kick things off with the core problem every trader faces. Then we'll look at Lighter's big idea and its single biggest hurdle. From there, we'll size up the competition, figure out what the lit token actually does, and wrap it all up with the final verdict. Let's get started with that trader's dilemma.
All right, first up, the trader's dilemma. So what is this huge problem that basically every crypto trader, from the seasoned pros to the total beginners, has to wrestle with?
Well, it really boils down to this one question. Do you want lightning-fast, top-tier performance? Or do you want to truly, actually own your own assets? Because for the longest time, you simply couldn't have both.
And this right here lays out that trade-off perfectly. On one hand, you've got your centralized exchanges, or CXs. They're fast, they have tons of liquidity, and the execution is professional grade. But, and this is a massive but, you don't own your keys. You're trusting them completely with your money. Then on the other side, you have decentralized exchanges, or DEXs. They give you what crypto is all about, right? Self-custody, decentralization. But to get that freedom, you almost always have to take a hit on performance.
So that brings us to Lighter's big idea. This exact problem, this friction between performance and control, is the very gap that Lighter is trying to fill.
So, what exactly is Lighter? Well, it's a decentralized exchange that's focused on one of the biggest markets in crypto, perpetual futures. Now, the really important part is how it's built. It uses a technology called a zk-rollup. And, get this, it uses a traditional order book just like the pros use on Binance or Coinbase, not the usual automated market maker model you see on many DEXs.
And their goal? It's crystal clear. They want to give you that same high-speed professional trading experience you get on a CEX, but without ever asking you to hand over your keys. It's all about getting the best of both worlds.
So how in the world do they actually do that? The secret sauce is that zk-rollup tech. Think about it like this. First, to get that CX level speed, all the orders and trades happen off the main Ethereum blockchain. Then, thousands of these transactions get bundled up together into one big batch. Now here's the magic trick. A single, super clever cryptographic proof is created for that entire batch. And finally, the main Ethereum network only needs to check that one tiny proof. By verifying that one proof, it instantly knows that every single trade inside that batch was totally valid. It's a really genius way to get massive speed while staying secure.
And what you get from this clever architecture are some really serious perks. You get much higher speeds, you get way lower costs because you're not paying for every single trade on layer 1, but you still get the bulletproof security of Ethereum. And thanks to those proofs, the entire system is transparent and verifiable by anyone.
Okay, the tech sounds cool, right? But now we have to talk about the real world. We're heading into the ultimate challenge, liquidity. Because here's the thing, having great technology is one part of the puzzle, but actually winning in the cutthroat world of derivatives trading, that's a whole different ballgame. And it pretty much always comes down to just one thing.
Yeah, this says it all. In the derivatives arena, having amazing technology is just your ticket to get in the door. It doesn't mean you're going to win. The real war is fought over liquidity. This is it. This is the one rule in this market you absolutely cannot forget. You could build the fastest, most secure trading engine in the universe, but without fuel, it's just a very expensive paperweight. And for a derivatives exchange, liquidity is the fuel.
So let's just quickly break down why it's so critical. See, without a deep pool of liquidity, the gap, the spread between the buy and sell price gets really wide. That means traders get bad prices and what's called slippage. And what do traders do when they get bad execution? They leave. They go to the exchanges where the liquidity is deep and the prices are tight. It creates this powerful cycle, a network effect, that is incredibly hard for a new player to break into.
And this brings us right to the battlefield itself. Lighter isn't just launching into an empty field, it's parachuting into one of the most insanely competitive sectors in all of crypto.
Just take a look at this table. It puts things into perspective pretty quickly. You've got Lighter with its custom ZK rollup, but look who they're up against. You've got DYDX, a behemoth in the space, with its own custom-built architecture. You've got Hyperliquid, which is just obsessed with raw performance. And then you have a completely different beast like Uniswap, using automated liquidity pools. The point is, this space is packed with serious, well-funded, and established players.
And beyond those direct competitors, Lighter is facing some pretty significant external risks. The competition, as we just saw, is absolutely brutal. The whole model depends on convincing big professional market makers to show up with their capital. On top of that, derivatives are always under the microscope of global regulators. And finally, the tech itself, while powerful, is super complex, and that always comes with its own set of risks.
So with all of these massive challenges, you have to wonder, where does the native token, LIT, actually fit into this whole equation? What's its job?
Well, the LIT token is designed to be the engine of the entire ecosystem. First, it's for governance, so holders get to vote on the future of the platform. But maybe most importantly, it's Lighter's main weapon in that war for liquidity. By offering LIT tokens as incentives, they hope to attract two key groups: regular traders to bring in volume, and those crucial professional market makers to provide the deep liquidity. And maybe down the road, it could provide economic perks like a share of the trading fees.
But here is the bottom line, the direct connection you need to understand. The real-world value of the LIT token is completely tied to the success of the exchange. It's simple. If people are trading on Lighter, the token has value. If they're not, then the incentives are worthless, there's nothing to govern, and the token's whole reason for existing kind of evaporates. Trading volume is everything.
Okay, let's pull all these threads together. We've looked at the tech, the challenge, the competition, the token. So what's the final verdict on Lighter?
Look, let's be clear. The project is built on a serious technical foundation. This is not just smoke and mirrors. The goal is the right one. But as we've hammered home, in this particular market, having solid tech is just the price of admission. It gets you into the game. It doesn't win it for you.
When we look ahead, you can really imagine three different paths for Lighter. The bullish case, they actually pull it off. They attract that critical mass of liquidity and manage to carve out a real piece of the market. The neutral case, they survive. They become a cool, niche platform for a small, dedicated group of users, but they never really break into that top tier. And of course, the bearish case is that they just can't overcome that liquidity hurdle, and growth eventually stalls out.
If you take away just one single thing from this entire breakdown, please let it be this: the technology absolutely matters. It's what makes Lighter an interesting project in the first place. But in the brutal arena of perpetual futures trading, liquidity is what decides who wins. It decides who thrives and who fades away.
So, the ultimate question here isn't really about the quality of Lighter's code or how elegant its zk-rollup is. The real question is whether this promising technology is enough to win a brutal head-to-head war for capital and volume against the biggest players in the game. And that is the only question that truly matters.